All right, good evening, everybody. Welcome to Crew Real Estate Investing. We've got a great seminar tonight, the BRRRR strategy and how it levels up your real estate investment game. This strategy right now, we're seeing a lot of investors use it. We're seeing the marketplace show some great opportunities to people. We'll go into depth of which communities are good to do it in and which buildings and property types are good to do it in. But we're really happy about our investors' returns in this strategy. How the BRRRR strategy levels up your investment game. As I said in the intro, we're seeing a lot of our clients start to use this just because of the way the market is shaping up to be this year. Also, people who don't really want to do a straight up flip and unload the property at the end of the process, they want to hang on to it and they want to keep it as a rental property. So that's what we're going to get into. But the BRRRR strategy, for those of you that don't know, it's buy, rehab, rent, refinance, and repeat. We're going to go over each stage of this strategy one by one. But why would you do a BRRRR strategy? What market would you do it in? You know, do you really have to rent the property? Do you want to hold on to the property? Is it different than a flip? What the investors that do really want to get into this are ones that want to scale their business as fast as they can. And generally in a market that's going up, it doesn't really have to be an increasing market. It could be a flat market, but they want to scale it as fast as they can and keep the tenants.
Yeah, so great question there, Tim. You know, do you want to keep the property? We always tell our clients, and we're realtors. I mean, you're not going to hear another realtor tell you this. We tell our clients not to sell their properties. And the reason why we do that is because when you sell, you're killing that golden goose, right, Tim? You're just letting go of everything. And the whole name of the game to create wealth is to hold on to those properties. This is the easiest way to get wealthy, and just ride it out. But at the same time, that property has to be cash flowing. So we need to stress that you're only going to refinance up to a point where the property itself is still cash flowing. And right now, some of you might be on low interest rates, right, Tim?
Yeah.
You may have signed 3, 4, 5 years ago, and they're coming up. You may want to actually go into a fixed term, right? You may want to actually refinance. And this is what's funny about that. I know Tim, I have a HELOC on one of my properties, and I know if I roll that possibly into a fixed term, I could actually release more equity and the payment will be less than what my HELOC is today. So you always have to look at your financing options to see where you're at and see what the best possible outcome is for that equity and for your payment options as well. So we need to stress that. But yep, once again, flipping, that's buying and selling. And you know what? The flippers, they have to deal with capital gains, where if you're doing the BRRRR strategy, one of the big reasons to hold on to it is you're not paying tax on that refinance dollars, and you really have to calculate that out. Okay, Tim, on the
first buying. This is the part where you have to get right. There's no ifs, ands, or buts about it. A lot of investment gurus will tell you you've got to buy the worst property on the worst street, the most rundown thing to get the lowest price. We're here to tell you don't have to get that, but you do have to buy something below market value. That way, when you go to refinance, you'll be able to pull more money out. You're not going to do this strategy on, you know, the nicest house in the neighborhood. You're not going to do this strategy in the probably the best street in the neighborhood. But it is a strategy that you have to analyze all of the numbers about that before you even go in and make an offer. You need to know what the ARV is going to be after you do. You need to know how much money you're going to put in on your renovations. You need to know what the rent's going to be at the end of it so that it can cover your costs after you've refinanced. So all of these numbers have to be worked out beforehand. For our engineering clients out there, they love this kind of stuff. They got spreadsheets upon spreadsheets to work this out. But for the average investor out there, this is the most important part, your buy. This is where you make your money on the buy. You don't make it when you sell, because you can buy something and sell it for the same price and you don't make any money. It's the buy was where you make your money.
Yeah, so this property here that Elijah and his family are outside of, I mean, we got a video on this guy on our YouTube channel, and he's buying properties to send those two kids to university one day. And I think he's already at 4 properties, Tim. So he's already there where he wants to be. I mean, he's always setting us up for the next deal. But I just want to talk about this property. It's down in Ogden. And the reason why we bought it, it must be about 2 years ago now, Tim. And I remember we bought it for around the 350 range. And right now, this property's probably, it's got double car garage in the back. It's detached. It's probably around the 460 to 480 range, somewhere in there, because it was very nice to start off with. It's got a legal suite downstairs, but we bought this property in the community knowing that this community was going to go up. So you want to get into those spillover communities where it's affordable to get into, prices are still reasonable, and it's attractive enough, or the community is in a transition where it's turning over. And when we say turning over, people are renovating their houses within that community, or they're knocking houses down, putting infills in. This community here, the sea train's supposed to be running through it in the next 5 years. Is it going to be 5 years?
Oh, yeah, it'll be there.
5 years. So, and you know what? We just knew when we were buying in here that all of these things were going to take place. And by taking action, the property's cash flowed from day one. It's a huge lot, so it's a subdividable lot later on. He could build infills on it later on, or a fourplex if he really wanted to. So there's multiple options. But to start off with your BRRRR, it's always good to get into a community that is about to turn over and go up in value naturally. And then when you add value, it even goes up even more.
Yeah, and another thing we're looking at these days, just because of we'll show you a little video at the end of this of one of our clients who has done 2 BRRRRs in a row. We're starting to look at specific condo buildings around the city to try and find the ones that are undervalued. What we're seeing is in all the really nice shiny towers behind us, the values that the price that you pay is going to be the value of that condo. There's not really any improvements you can make to it. They're fairly new. But some of these older condo buildings built in the 80s and the 90s, they're not too old, so they don't need too much work, but they're undervalued. What we're finding is in the point of view condos, if you know what a point of view condo is, they built them all around town. They're very basic. They come with an underground parking garage, and that's about it. There's no amenities in the units. There's no gym, no pool, no anything like that. There might be 1 or 2 elevators, that's it, and very little ground keeping around it. So they're bare bones condos, but we're seeing that they're very undervalued right now because people haven't discovered that the low price they are and the way the condo market has shifted.
Yeah, and what's funny about condos, and we've been talking about condos all year, just because for the last 10 years, we weren't allowed to talk about condos because rents couldn't cover the costs on them. They weren't cash flowing. But what's happened right now, one of our clients just rented out his condo, Tim, in St. Alter this morning for $2,000. And we just couldn't believe the rent for a 2-bedroom. This one's got a 2-bathroom. It's 890 square feet or 840 square feet, ground floor unit, rented for $2,000 per month. And so now condos are back in favor. And the reason why is, first, yes, you can cash flow, but the biggest reason is because you can buy a 1970s, 80s, 90s condo, and even those point of view condos, they're early 2000s, right? They're not even that old. You can buy some of these condos low 200,000s, and brand new condos anywhere in the city are going from 350 all the way up to 600,000. So there is a massive difference between old for the same size units, same specs, to new. And when you see that, the writing is on the wall that the condo market is a great option to do a BRRRR, because once you add value, you can get that ARV that you need, the after renovation value, to pull that equity out. You may not get all of it, Tim, but at least you're going to get some of it, or you may get 50% of it, you may get all of it, and then you can go again.
Yeah, and this ties into the second part, the rehab part. These condos, when you are doing the rehab part of the condos, we can use Graham as an example. We were in his unit just yesterday in Arbor Lake, and he was doing flooring, baseboards, paint, light fixtures, and the pole. He painted the kitchen cabinets, and he was doing the poles on them, and he was doing the whole unit for about $8,000.
Yeah.
So there, with a condo, there's no exterior costs. You don't have to go and do the roof and the siding and all that.
Yeah.
So you can do it for a very, very affordable cost. And if that $8,000 is going to get you a $60,000 equity boost,
Yeah.
then you can do that all day long. And we've got him on a video at the end, and he really explains it well.
Yeah. So $8,000. So you guys listen to this. So he was doing flooring, he did painting, he changed countertops.
Oh yeah, he changed
He
it.
changed the countertop in both kitchen and bathroom, and changed the pools on the cabinetry. The paint was good enough on the cabinetry. And he did all that for $8,500, and he now can turn around and get the value he needs to pull that money back out. So you know what, that will get him his deposit, his renovation cost back out. And once again, you really have to bring something to the table. We'll just quickly touch base on this. Here's Connor in his kitchen doing his own flooring. I mean, you have to get your hands dirty if you want to make the most money. I mean, you don't have to. I have to hire everyone out because I'm not handy. That's why I like to let my properties naturally go up in value, then add more value because I've got to hire contractors to do it. And then I can do the refinance after that. But if you really want to get ahead of the game and not wait on tradespeople and I mean, if you can do it, you can do it. But you know what? The people, Tim, that are really getting ahead in this game are the people that are doing the work, you know, some of it themselves.
Yeah, and you're not saying you have to go and learn how to do all the electrical work or the plumbing. There's some tasks in a rehab that, you know, not everyone's going to be able to do. And, you know, unless you're a licensed electrician, we widely suggest that you don't even touch the electrical. But if you can do things like paint the walls, I mean, everybody is painted at one time or another. Yeah, sure, we're not great at it sometimes, but if you can do the painting or replace the pulls on the cabinets yourself, very simple jobs like that, you're actually saving money because a contractor will charge you a ton of money for his labor to do that.
Yeah, I mean, just to paint a 2-bedroom unit these days is normally around $3,000 to $3,500. So you really, if you can get in there, Tim, what would the paint
You go to pretty price for paint, it's less than $500.
$500. So there you go. So it's up to you, but you also have to put a budget in place. And one thing with the renovations that we want to stress is that this will become a rental property. So you're not going to put high-end appliances in there. You're not going to put high-end flooring. We would recommend what Connor's putting in, vinyl plank, because we know that it will last forever.
Yeah.
It will never get scratched. It's waterproof. So you want to put in renovations that, one, are going to be tasteful to the tenants. I mean, Graham, were there, you were commenting on the lighting he was putting in. And these old units come with these bulb lighting in the 70s, right? He took them down. He found these disc LEDs. They were 9-inch, he said. So they were just round. And they were $22 on Amazon, and he just changed them out himself.
Yeah, so he changed the whole unit for, he said there were 5 on the main, and the bedrooms were different. So, you know, all the lighting in the whole place for less than $200.
Yeah, and the unit was super bright, and it looked contemporary as well. So you want to do things like that that are going to attract the tenants are going to like. And it's going to be appealing for everybody that wants to live there. So you do get maximum rents. And when we talk about maximum rents, these properties, these condos we're talking about were once rented, when I say once, Nico's was rented just last month for $1,500. The tenants moved out and he just rented it this morning for $2,000. So that's a $450 increase in rent. And because condos, that's one thing we were talking about, you have to keep an eye on the condo fees. And that's what always got us stuck with condos, because we couldn't get enough rent to cover it. But now with rents going up so much, you really have to keep those condo fees these days, Tim, under 600.
Yeah.
And then you have a chance to cash flow 100% in this market.
Yeah, and so quickly then, some of the things that you want to do in your rehab, if you are into a house or a half duplex, kitchens and bathrooms always bring more value than you put into them. A roof, if the roof is shot and you can get the roof done, that's another thing. Here at the adding additional bedrooms or bathrooms, if you can do it within the structures of the house, like if you're in one of those older 60s bungalows where it had 3 bedrooms up and someone pulled the wall out between the 2 smaller bedrooms, if you can put that wall back in, and the rooms are still big enough, that's another thing that'll add value. What you want to do is you want to do things that will make the house more livable. So that when the appraiser goes through, you know, he'll go, okay, if there's 3 bedrooms up and 2 down, he'll go, it's a 5-bedroom house. But if there's only 4 bedrooms, he might appraise it at a little less. So you want to have an eye towards the visual things. You know, if you see an older bathroom as compared to a newer bathroom, the newer bathroom is going to make the house look more valuable.
And the last point Tim's got on here is legalizing a secondary suite. Now, there's 2 ways to go about this. A secondary suite can increase a property's value all the way from $60,000 to $80,000 we've seen. Okay, but there is a catch. If you do start off to legalize the basement suite that doesn't have an existing kitchen already, the costs are going to be way up there to put the kitchen in and bring it to today's codes. So you actually want to find a property that has a suite already that can be easily turned into a legal suite with minimal costs. And when we say minimal cost, some of the big ticket items on legalizing a suite could be the ceiling in the basement. If it's not drywalled, if it's drop down ceiling, that whole ceiling has to come down and be drywalled. And we've seen quotes from $11,000 to $14,000. If you don't have a proper exterior entryway into the suite, digging down on the outside of a foundation, all the way down to the bottom of a bungalow, say, to the footing, that could cost anywhere from, Tim, we've seen around $14,000 for the concrete to pour a staircase like that. You basically have to make sure that when you're looking at these suite of properties, that it has a kitchen already, that it has a good exterior door, that the ceiling is drywalled. And the other ticket items, Tim, there could be drywall in the furnace room. There could be windows that are big enough. So you really just got to make sure that the other one, Tim, could be the electrical panel is in a bathroom. That can't be there. So there's certain things you got to look for. But if all of these things are ticked off, we've legalized, Tim, basement suites for as little, I think it's
$2,000 or $3,000.
$2,000 or $3,000, and increased the value by $50,000 to $60,000 by spending $3,000.
Yeah, again, that a jump that high is not going to be in every suite of property, but if it's a very, very nice livable suite, you can see an increase in price by that much.
Yeah, and all you have to do is go on the MLS and see what legal suite of properties sell for compared to illegal, and you can see the price difference straight away on that. If anyone has any questions, please put it in the chat. We're happy to take any questions during the presentation.
Okay, the next part of the strategy is rent. Now, renting out a property, most people on this call will be landlords. Whether you rent out the property yourself, whether you're the property manager or whether you hire a property manager, renting out the property is the most important part of having a rental property. What I mean by that is screening the tenants, getting the initial tenant in there. The screening process has to be followed. Now, whether you use our landlord kit, which all of our investors get, or you have your own screening system, the screening of the tenants, like I said, is the most important part. You need to get the best tenants that you can in the market that you're in.
Yeah, and when Tim says that, don't always go for the most rent, right? We always wonder about this. Rents are increasing so much that, you know, can some of these tenants afford it? They have to be earning good incomes these days if a 2-bedroom condo on average is renting for $2,000 per month. I mean, that same condo a couple of years ago was only renting for $1,350. So that's a huge increase. And sometimes it's better to take 2 incomes than just 1 income. Okay, so renting is the key to this whole creating wealth from real estate. And at the same time, you've just renovated this property that you're going to rent out. So you want to make sure that the tenants are going to look after it like it's their own, okay? And that's why we're stressing when you do your renovations, you don't have to put in high-end appliances, right? One of our investors that owns the most properties in our network, he actually puts in black appliances, not stainless steel appliances, black appliances in his properties. I mean, he owns a lot of properties, but he puts black appliances in because if there's a scratch, you know, his property manager knows to get Sharpie out and just cover it with black Sharpie. So, and you think that's crazy, it worked. We heard that, like, that's brilliant. So, but that's at a different scale. But we want to stress that it's all about finding those right tenants that are going to look after it and making sure that they can afford it and that they're going to stick around. At the same time, when you do rent, you want to know how many people are living in the property, because these days it's taking more. It might be two couples or friends living together to pay rent. I mean, we're even seeing, Tim, student rentals now rent by the room for $1,000 per room. So, you know, not everyone's going to do student rentals. It is a great way to cash flow, but it does put more wear and tear on the property as well. But there's multiple ways to make money from renting, either from Airbnb or from executive rentals or from student rental.
Yeah. One more thing I want to bring up on the appliances there about not going high end is I've actually walked through my rental properties with an appraiser, and I can tell you that they're just walking through. They're not going to open the fridge and make sure that it's, you know, the model number means that it's the highest end of that model, like a Whirlpool. They're walking through, taking a look at all the rooms, you know, making sure that the house is what you've advertised it at. You know, does the kitchen look nice? Does it look sort of semi-high end? They're not actually looking at the materials that go into it. They're looking at what it looks like. Most of the appraisers don't put in that much work to nail down on what, you know, the materials cost that go into the house. They're seeing what it looks like and they're comparing it to other houses in the neighborhood that look the same. And those ones that people may have put on all the high-end stuff. As long as your stuff looks high-end,
yeah,
you'll get the appraisal number will come out the same.
Yeah, the key is there is the size of your property. So when we're looking at condos, Tim, we're always trying to get above 800 square feet, because anything below that is rated, you know, as a 1 bedroom or
tight 2 bedroom.
Yeah, disregarded as people would say that, right? Or, you know, like I know on the west side, I was telling Tim the other day, on the west side, they're selling, houses are selling in the 415 to 425 per square foot range right now. So it doesn't matter where you're at. Like, I mean, if you're in a cheaper area on the west side, Tim, like say Coach Hill or Strathcona or Signal Hill, and you have a big property, you could renovate that and get the value out later on. So we want to stress that if you've got the size and you've got the specs, but the quality isn't there, like Tim is saying, you could still, you know, spruce it up, put lipstick on it, and get that appraisal. So we want to stress that.
Yeah. So, and back to this rental slide, what we suggest is once you get the property renovated and you get some tenants in there, we suggest that you be your own landlord at least until that appraiser goes through. If you throw it over to a property management company, not all of them will give you their best effort. And what do I mean by that? These big property management companies, what they're after is they're after buildings. They want to be the property manager for a whole building. So they might have, you know, 100 to 150 units under their management. That means it's way better for their bottom line. The one-offs that you might have out there, they're not really keen on doing that. They'll take that and put it in their portfolio, but they will not give you the same attention that they're going to give to that building that has 150 units in it.
Yeah, and these days, I don't know why you would hire a property manager. I mean, it's so easy to rent out properties. There's lineups of tenants. And no one's going to look after the property better than you are. And you might be sitting there, well, I don't have the time. I mean, we've got Air Canada pilots, we've got doctors that have done our landlord training and do it themselves. And they save themselves, Tim. Rents these days on, say, a suite of property. I mean, I was looking at the rents. I own a property in Minapore, and I had to look at the rents today, actually, and the rents are $3,600 per month. And if I had a property manager, that'd be $360. Yeah. $360 a month plus the letting fee. I mean, that would probably bring it up to around $500 a month for the year. That's a lot of money, right? You could put that money towards another deposit on another property. So you really have to think about that.
Okay. The refinance part. Now, Danielle went into quite a bit of depth on this. But when it comes to that refinance part, like we said, the appraisal piece is very important. So you have to have the property looking good when the appraiser goes through. If that means you know, if your tenant's already in there, if that means you have to go in and hammer them to keep it clean, you got to make them keep it clean. And keep in mind that you have to at least have a general knowledge of what similar properties are selling for. So that's when you work with a good realtor who can just fire you over some comparables to your property, and you will know ahead of time what the average price is going to be, and you'll know pretty much how much money you'll be able to pull out, because you'll know generally what it's going to appraise at.
Yeah, we put our investors on a market report so they know when properties sell in their area. If anyone wants to be on this report for your community, you just let us know. But they know every month, Tim, on what properties are selling for. Like, I know, boom, there's one that sold 30 grand more, 60 grand more. Then you know you're getting to the time where you can refinance. But it all starts with that right property. You want to get into a property that you know that the ARV is there. So if you were to add value to that property today, and there's multiple communities, Tim, that we can talk about. We just bought something in Abbeydale that was semi renovated, and then if you take an unrenovated in Abbeydale, the spread would be about $60,000. So you know if you're buying in Abbeydale, that is a good place for a BRRRR. Okay, so you really want to make sure that that the numbers are there to start off with before you even get into it. I mean, with the BRRRR, at the end of the day, you can choose when you want to go through the process. That's what I like about it. The BRRRR, people think, oh, I have to get in and get out. We always say this about real estate. You know what? It's not timing in the market, it's time in the market. So we like to have actually a few BRRRRs on the go, or have a few multiple different strategies on the go, so you can pull money from a property and go again at a later date when you're comfortable. So you really shouldn't put a lot of stress on yourself thinking, oh, I'm going to do the BRRRR. I mean, Tim, the young couple that were in Silver Springs, the Tanner and his wife that we're looking for, they took 2 years, I think, to legalize. They moved into a property themselves. They didn't rent it out first, and they renovated. And then the value, they called us for the value. We got the appraisers out. I think they bought for 500, spent 150 in because they're in for 650. And they asked us what it was worth, and I said, you know what, those things are selling $850. They got the appraisal, it's done. Now they've gone to buy a new house in a new community. So you know what, can it help you? And they kept the first property. So that's what it's all about. You don't have to rush out and think you have to pull this off in the next 3 months. It's actually better if you can actually time it. If you had a 3-year term on your mortgage, you may time it within that 3-year period. It's not going to put any stress. You may actually renovate the basement first, rent that out so you got extra income coming in, and then, you know what, renovate the upstairs, and then over a 3-year period, and then you rent out the upstairs, and then you're off to something else. So you're not a bad little strategy, especially, Tim, if you're moving in, you only have to put 5% down.
Yeah, but on the refinance piece, you have to understand that in Canada, you can only refinance up to 80% of the property's value. It's a little different in the States, but in Canada, that's the hard and fast rule. So if you go in for a refinance, that 80% of the value is all you can refinance up to. So you're leaving 20% of your equity in there. Now, that's not a bad rule, because it's making sure that every investor has some equity in that house for, you know, in case there's a market shock or something like that. But that's one number that you have to remember whenever you get a refinance.
Yeah, and so you're sitting there thinking, well, where should my equity position be? Once again, if you're young and you want to grow your portfolio, back in the day, we were refinancing all the way. I was refinancing some over 110%. So, and then putting money in my back pocket. They used to allow us to do that. Okay, so we want to stress. I mean, that was not the greatest strategy. Yeah, well, it wasn't, and then we just got carried away and bought too many houses. But you know, that's why Tim's sitting here today saying, well, having 20% left over is not bad. You know what I mean? When you go to sell, at least there's something to sell with, right? But if you're just in a different stage and you have enough wealth, you know what, your current position may be totally opposite. I mean, I've got properties now that I want to pay off, and that's a total opposite strategy than most investors will tell you to do. So you just got to get to your comfort level and see where you're at. And don't be sitting there thinking you can't make money in this market. That's just crazy, because our clients are absolutely killing it right now on the cash flow and on the appreciation and adding value like the BRRRR, and then pulling that money out and going again. And we're seeing people right now, we've talked about how many people of our investors that are living for free right now, or have made at least $100,000, $200,000, $300,000 off their properties just by taking action.
Yeah. Okay, so the next part of it, the final part of it, is the repeat part of it. That should be your goal if you want to do this on a continuous basis, to acquire as many properties as you can. Right here is Graham. We've done an expose on him on YouTube. He is actually a poster child for the BRRRR. He's got it picture perfect. Well, next slide we'll have a video of him talking about what he does, but he keeps an eye on the market. He chose a specific building that he wanted to do this in. Now, you don't have to choose condos. You can choose houses, half duplexes, whatever you want. But that just seems to be his niche. He lived in one, so he knew what was going on in that building. He knew what the prices were at. He kept an eye on the sales. So he knew what was selling, whether they were renovated or unrenovated. And he went on, and now he's got 3 in there, and he's got an eye towards owning another one.
Yeah.
Because he bought his latest one for $270, but another one in the same building just sold for $365.
$365. We bought one at Christmas time for $190. And then we bought another one, and it was 2-bedroom, right? 2-bedroom, 1 bath. Then we bought the next one for $270. That actually helped him get the value for the next one, right? And so he refinanced what Daniel was saying, because Daniel did all the mortgages for him. She can't believe this is full property, and he just kept refinancing the properties to pay for the next property. Okay, so that's what we want to stress. And now he's got enough equity on this latest purchase, which we just possession yesterday.
Yes.
He's got enough equity to go again if he wants to. So, I mean, the banks are going to tighten up on him, but he's just.
He was even telling us now it might be time to pull in partners.
Yeah.
And he'll go and he'll canvass his coworkers, he'll canvass his friends, and he'll go, look, here's my track record.
Yeah.
I've done this 3 times in the same building. This is the amount of equity that I've pulled out on this strategy. And every single one of these places is cash flow positive. So much so, including a house that he owns as well, that his current place where he's living, he's rent free, and he'll tell us about that in his video. But when he goes to attract joint venture partners to do another one, all he has to do is just document what he's done. And that's what we tell all of our clients to do when they're doing this, because eventually, like Azad said, the banks are going to say no more.
Yeah.
Right.
And you have to get joint venture partners in the end. That's the only way to do it. So let's watch the video on yesterday's.
Here, we'll just let me start that over again. But he talks kind of fast, so we really got to pay attention here. Azad and I will shut up while he's talking. But just listen closely to his story and his numbers.
And purchase that we're going to do. And it's one bedroom, same building.
Whoa.
That, and even after that, we've got our friends, really again. And then we're applying the money next door. So that's what we met with South. And it was a tenant at the time. Nobody wanted to touch it. I was discussing that with Tim, and the price was killer. And we picked that up. The tenant moved out a few months later, so it all worked out. We're renovating that one down. And in that time period between December and March, that condo had gone up about 60. And that was even without us doing any renovations. So we did a cash out refinance with that. Danielle helped me with that. And that equity is then bought on the number.
Yeah, and we can't even believe it. Just
So basically, I'm mortgage free. So the cash flow on the house, the 1 bedroom, the 2 bedroom is going to cover this mortgage, and then some cash flow goes to the house.
So what can you tell people out there that are on the fence? On the fence, people that don't understand or they're
Sure, Danielle is a great mortgage broker. I use Tiro lawyer as well as recommendation, and I use the team behind it. That's right. Yeah, it makes it easy when you've got the right team. Because I have questions. I'm asking too many questions, but that's how you learn. So within a year, we've been able to knock out 3 fundeds. Or where we stand. I could have done it without you guys. So just jump into it, you know, and that makes sense. And make sure it makes sense.
well, thanks so much for you, and hopefully that helps you guys out there. See you on the next.
Okay, so he did talk quite fast there, but you can see how when he jumped in, he just started to go. He's very energetic. He really we don't suggest that every one of our clients move this fast, but you know, he's really seeing some success out there, and he's doing it in the condo market. He's not doing it in the traditional house, single family home market that you see all the gurus talk about. So it can be done at a lower price point.
Yeah, which is awesome, because then you know what, you're not using a lot of capital to get into it. And you got to remember with the BRRRR, if you are going to renovate, you do need some of those funds to use for renovations. I mean, you could use a line of credit. I mean, the renovation he's doing is $9,000. So if you had enough credit on your credit card, you could use a credit card, or you can go to Home Depot and get an 18-month free credit for 18 months of free interest for 18. There's multiple ways to do it. Another way you could do it is mortgage plus improvements. You could Danielle does this for our clients as well. If you're buying a condo for 220,000, yeah, and you're financed up to 250, you could actually take, you know, 240,000 and take 20 grand and put it in there. So, you know, there's different ways to fund the project. But what we're kind of saying is that all the numbers have to align. And Graham here, you know, he's got 4 properties ready, and he's bought 3 in the last year in one building, just because it's had proven success. And so it can be done for sure.
Yeah, so that's our BRRRR strategy seminar. If you want any more information on it, or if you're thinking of doing it, you want to sit down and talk to us about it, you want us to go over some more examples, by all means, set up a meeting with us. We're happy to go over how you do this, how you get started in it, how much money you need, what are good neighborhoods, good buildings to do it in. We're seeing great success with our clients doing it right now. There are some markets, like if the market was going down, we wouldn't suggest this kind of thing. But right now we're in a market where, you know, our clients are having tons of success. So if you want to get involved in it, just drop us a line. Our emails and our phone numbers will be on the last slide. But by all means, we'll be happy to discuss it with you, because we want everyone else to have success with it.
Yeah, and if Graham can do it, I mean, he's just an awesome guy and one to learn. And once again, yeah, he's got tons of questions for us, and we're here to answer him. And not only that, we both go up there and see him whenever he wants to have a meeting, and he's got guidance every step of the way. If anyone has any questions, please put it in the chat, and we'll let you know about our little book, 1 Million Reasons to Buy Real Estate. This is free. If you haven't read it before, you can download it from our website at crewrealestateinvesting.com. Just go on there. It's a good read, and it goes through the core fundamentals of investing in real estate. If you are thinking of investing in real estate, it's a must read for you.
Again, it's a free download, so anybody can download it, and it's got tons and tons of information on it that's relevant in the market today.
Yeah, the next thing is Fearless Real Estate. We wrote this book a couple of years back. It's doing very, very well. And once again, the reason why we've got all our clients on the front cover is because we want to showcase what you can do, what our clients are doing, so you can replicate that. We wanted to give you the meat and potatoes that you need to move forward and take action. That's the whole reason why we do all of this. And that book is $20 on our website. You'll find it on there as well. And it's a great read. The next thing here that we've got, not everybody has to do this. We need to stress. Some people want to, actually the course is designed to create $1 million worth of equity for you. And if you think that's something for you, this course will help you get there. It's $97 per month. And there's over 100 hours of content on there. And the best thing about it is that you get Tim and myself whenever you need us to help you work out that strategy, to work out your goals. And then we actually will help you move forward, right?
Yeah. So we've got a question here, how much is lifetime access? Lifetime access is $997. Then you get access to these things forever. Not only does it go over every single real estate investment strategy that our clients are using, it has all kinds of guides and checklists, everything you need to get started and to continue on your real estate investing career. And one thing you do also get with it is you get access to Azad and myself. Not 24 hours a day, but pretty much anytime you have a question, just text it to us and we're happy to answer it.
Yeah, and the other thing, there are like joint venture documents or contracts in there. I mean, they're worth $400 to start off with. Our landlord training, as I just mentioned, it's saving our clients upwards of $2,000 per year. So we didn't put this together to make money off it, even though it's very, very popular. Our clients are having huge success. And we only want people that really want to take action. I mean, if you can't get there financially right now, we want to put systems in place so you can get there, either through joint ventures or doing different options like Airbnb sublets or agreements for sale or even lease options. So we are here to actually make this money back for you.
Yeah, we'd rather have you out there making money doing, any type of real estate investing strategy as opposed to just paying us $97 a month. We want to see your success. So don't think of this as something that every one of our investors has to do. No, we want you to make money on your own investing. So that's what we want to do.
Yeah. We didn't want to put this out there, force people to do it. We did it because we want you to be like these guys on our YouTube channel. I mean, that's what we want. At the end of the day, that's what gives us the real satisfaction. That's what keeps us going. I think I said this was our 190th seminar today. And we do that every second Tuesday just because we're having real results, like real people, real results, and real money now, which is just crazy. These people, and they're all different age groups. So we kind of realize we've got a lot of young people on this slide here, but Tim, they're all age groups. I've got people retired.
Clients that we were working with in the early around 2006, and they're starting to cash out and retire on some of these things. Like Kathy and Dwayne, they've sold a couple of side-by-side duplexes that they have, and they've still got 2 other ones in their portfolio, but they've sold some and they're really, really enjoying their retirement because they made massive equity gains.
Yeah, and Bill and Audrey just rang us this week to sell their properties. They've got 3 properties, and they came to us, Tim, probably about 6 years ago to create an extra $500,000 for their retirement, and they're well on their way. They're actually looking to sell everything up now and retire. So everyone's at different age brackets, and so don't let that stop you. And once again, we're here to actually help you move forward.
Yeah, so there's our email address and our phone number. If you have any questions, if you want to get started, or if you get stuck because the banks won't lend you any more money, if you need a different strategy, just drop us a line. We're more than happy to help. We can meet you in this boardroom we're in right here, or we can meet you on Zoom if you prefer that, even as a phone call. If you need help investing in real estate, just drop us a line. Yeah,
and the interview with Graham that you guys just seen, he saw our course online. I could tell you the story about him. He saw our course online. We did a Zoom. Normally Tim and I do the Zooms together. For some reason, when Tim was showing houses, I think I did it. And I came into the office. I said, Tim, I met this great guy. He's ready to go. And then Tim, just about 3 weeks later, well, we put him onto Danielle, he got financed, we pulled money. So this is the actual story of Graham. And now he's on his fourth property. We pulled money out of his first property, got him into the second, then got him a third, and now he's under his fourth. So, and not only that, he's going to make 100 grand off this last one. He made $80,000 off the one before that. And not only that, he became a landlord, and we actually went through with our training with him, and so he could have success and rented out his house for the most I've ever seen up there in Upper Lake.
So he's rented it out for $3,400 a month.
Yeah.
And this is just a 2-story house in Arbor Lake.
Yeah, so I mean, that guy now is living for free. He said his cash flow is $2,000 a month.
Yeah.
So he's actually living for free, and he's taking our advice. And so if you want to be on track to do that, I mean, everyone's at different stages in their life. Our job is to continue to work with you to get you there. And you don't have to start off with a big flip or anything like that, right?
Yeah.
You start off with a 1-bedroom condo.
So that concludes our seminar for today. We'll join you in 2 weeks for our next one. I believe it's going to be on property management. Not quite sure on that, but you'll get an email reminding you what it is. Thank you for joining us, and we'll see you in 2 weeks.